Here's the chapter outline of chapter 5. First, we'll look at support and resistance, followed by bouncy ball in a box, how to identify support and resistance, support turning to resistance and vice versa, false breakouts and ideal breakouts, price as a confirmation, why you need to know about support and resistance, and lastly is the summary of this lesson. Okay, so to begin, support and resistance is very easy to understand. They are just levels where the stock had difficulty trying to break through. And this is because of the sentiments of the buyers and sellers in the market. In stocks, the sentiment refers to the overall opinion of the market participants. So for example, if you hear people saying that the overall sentiment of the market is bullish, what this sentence means is investors are feeling positive and optimistic about the stocks in the market. So let me give you a simple example to describe support and resistance. I'm going to use an example of a small bouncy ball in a box. You know those small rubber bouncy balls that can bounce really high if you throw them real hard against the ground? Now imagine if you were to drop one of them into a box, and let's assume that the ball will just keep bouncing inside the box. So when the ball bounces off the bottom and moves towards the top, it will hit the top of the box, and because it can't get through or break through the top, it will turn and fall back down. Now this is resistance happening. As the ball moves towards the bottom of the box, it will hit the bottom, and because it doesn't have enough force to break through the bottom, it will bounce off it and move upwards. Now this is support happening. So this process will keep repeating until the ball has enough force to break through either the top or bottom of the box. And this force will come from the sentiment of the investors in the market. Now the ball in this example refers to the stocks. When the sentiment of the market is bullish, meaning there are more buyers than sellers, this bullish force will propel the ball higher and it will be able to break through the top of the box and any resistance level above it. Now if the sentiment of the market is bearish, meaning that there are more sellers than buyers, this bearish force will drive the ball lower and it will be able to break through the bottom of the box and the support levels below it. So with everything that has been said, how do you identify support and resistance levels? Support and resistance level can be identified depending on the current direction that the stock is moving towards. Now when a stock is moving up, it will face resistance, and when a stock is moving down, it will find support. Note that these levels depend on the current direction that the stock is moving towards and not the trend that the stock is in. So a stock can find support and resistance both in an uptrend and in a downtrend. Let me just give you an example. We know that in a downtrend, the stock will generally be moving downwards. So the stock price will keep getting lower and lower in a downtrend. But remember that I mentioned the general movement of a stock is in a zigzag pattern. So this means that in the downtrend, as the stock moves down, there are also times where the stock will move up before continuing the move downwards. So in these moments, when the stock moves up, it will face resistance, although for most of the time, the stock will be trying to find support because the stock will be moving down for the majority of the time in the downtrend. And similar to trend lines, significant support and resistance levels are levels that have been repeatedly tested, which means there are many touches on a support or resistance level, and the more touches there are on that level, the stronger that level is.